Hi everyone, today we did get a slight continuation right to that key level 597.63, several wicks to that level, and then you can see a bit of a sell here breaking below those EMAs on the hourly chart here. So a little bit of a reversal, a little bit of a topping pattern, momentum bearish, RSI bearish. Does this have a little bit more pullback in it? Is it going to start to break structure, or is this just a short-term pullback? Let's take a quick look at the charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got Trump coming out and saying that Powell is too late and must lower interest rates on the weak data that we got today. ADP jobs report was absolutely not what we wanted to see, the lowest numbers in 2 years. And Trump told Powell that not cutting rates was a mistake. Is he right at this point? I think you could actually make an argument that he might be right in this case, because we have seen inflation coming down pretty substantially over the last couple of months. We've seen the economy slowing. We've seen the jobs numbers starting to decline a little bit. We haven't seen the unemployment rate go higher yet. I think that's probably the last shoe to drop here before we start to see cuts come in a little bit more aggressively. That has not happened yet, but these numbers continue to be not super great. You can see numbers are out. Too late, lower the rate. He is unbelievable. Of course, he is exaggerating a lot, as he tends to do, but in this case, I think he's probably on the right track, just bad on the messaging as usual. Moving over to fear and greed index, we finished at a 54 down from a 55. This has been pulling back fairly substantially despite the continued movement higher. Momentum, still extreme fear. Strength, flat. Breadth, pulling back. Put call ratio flat here, and then looking at market volatility, continues to come down, neutralized. Safe haven demand continues to step up just a little bit. Look at junk bonds. This has had a massive move over the last couple days, and it continues to do so, heading a little bit higher into extreme fear. Is this an indicator that we need to watch for? I do think it's something that we should consider definitely in the short term. Moving over to the economic calendar, you can see those ADP non-farms 37K versus the 111K, way worse than expectations. Previous number also revised down just a little bit, although we did see some soft data come in a little better than expectations, so a little mixed signals there. Interesting. But of course, we have all of the big jobs data coming out on the Friday with the unemployment rate. We'll see if that has any follow through on the Friday, but for now, not super great. Initial jobless claims have been relatively flat. That's not sparking any warning signs quite yet. Continuing jobless claims have been quite flat as well. You can see expectation is a slight decline there, and then landed Fed GDP pretty flat there as well. So it is a little concerning. The numbers today are concerning. Does it forecast for the Friday? We're not sure yet, but we really haven't seen this correlated with anything else yet. Moving over to the charts, we did see a slight move higher and then a rejection, finishing negative on the day for the S&Ps, touching that 597.63 level. That is a very important level. That's the consolidation low. From this point here, you can see we came and tagged it on 14 February, rallied up to that all-time high level around 610. And then once that broke back here, that was the big continuation lower to the lows back around 550. Is this the point where we start to see some rejection? The S&Ps are signaling a little bit of weakness off of that level. We've seen this before, and we did end up pushing through it, but it is something to consider. Very important level here for tomorrow, and you can see that clear price touched it post NVDA, rejected from there, touching it again, starting to see a little bit of rejection from there. So key level, watching this one tomorrow. Support right now, 591.09. Resistance, if we did get the break, would be 604.54. Moving over to the Tasty charts here, you can see we are still pretty much in the same area we have been in. Above that 8 EMA, 594.30 is that level. Did get above that first ATR band for a moment. Very little volume here today. Couldn't quite get to the second band. That is up at 600.09. We'll see if we can get there tomorrow, get a little bit of continuation, but we rejected off of it last time. We're in that same price range. Are we going to reject off this same zone once again? Certainly a possibility. And looking at that daily chart, really small pullback, still well above that 8 EMA. The momentum is definitely faded here, but the ATR bands still very much bullish. We're right at that second band, 598.74. And then if we did get the push to the upper band there, that would be 606.04. Then moving over here to the NASDAQ did not look nearly as weak. We didn't really have a major resistance in here between 523 and that 538 kind of all-time high range. We're in the middle of this chop, well above the structure that we're looking at on the SPY charts. So there's really nothing above this intermediate resistance, if you even want to call it that. Realistically, I would expect this to wick the all-time high there, and then I am expecting a little bit of a rejection. This still looks like kind of sideways action. Clear high in, big low here. Do we come to this zone, reject again, and kind of get this really wide ranging sideways chop? Potentially, certainly a possibility. Earnings didn't exactly greenlight any higher moves, in my opinion. This rally has been off of tariffs being paused, moving back to a kind of status quo. Can we get above that even with the geopolitical risk? I don't really see that being the long-term solution. So this is still short-term in my opinion, and I don't expect to get to all-time highs. But can we get there? Absolutely. Momentum stepping back to bullish. RSI getting very close to overbought conditions again. Clean through that RSI SMA. And right now we're sitting at a 68.84. Want to see this at least touch that 70 level before we get a rejection. And then looking at the hourly chart here, just to compare with that SPY chart, you can see we did go a little bit higher, clean above that previous number, went a little bit higher, didn't quite touch the pre-market high post NVIDIA, so we're not quite all the way there yet, but we're still structurally bullish, still staying above that 21 EMA. If the 21 goes here, that's going to be definitely something to watch. Going to be watching that one tomorrow. 528.20 is that level. I think if we get below there, we might see a pullback towards that 55, which is all the way down at 523.40. It's been a big move. We're definitely right at those overbought conditions. And if we start to see this kind of sideways chop, pull back in time, topping pattern, it's probably going to be time to take some profits on this bullish run. Moving over to the NASDAQ charts, that upper band right now is 536.46. I still would like to see a push to that level. That would take you very, very close to the all-time high, get a tag of that level, and then we see a big rejection from there. So far, this has been a pullback in time, hold the 8 EMA, big continuation, and I still think that is the structure that we should be trading based off these charts here, so it doesn't look as bad on the Tasty charts. And then jumping down here to that 4 hour, you can see we're definitely fading on the momentum. The 8 EMA right in there, 527.07, so pretty close to that 21 EMA on the hourly chart. If we do get too much below that level, we're probably going to pull back closer to that 521, 522 area. So is that zone going to hold as a previous resistance turning into a current support? Absolutely a possibility, but for now, still bullish structure, looking for a push to that next zone. Moving over to the Russell and the Dow, these definitely don't look as good as the previous charts. Down about a quarter, tried to go a little bit higher, rejected from there. Currently holding support still at 208.22 for the Russell, tested that level, still above it in the after hours. As long as that holds, we're in good shape. And then looking at the Dow here, you can see touched that level yesterday, 426.20, touched it again today, rejected from there, down about a quarter. So not super great. The momentum is zero right now. This still looks like either a rising wedge or a bullish triangle. Still waiting to see kind of what the result is there. If I had to guess on the Dow, I would say this is more of a rising wedge, and I do suspect that this will probably break down eventually. The Russell, on the other hand, looks more like a topping pattern with a high double top potentially in here. If it rejects from there, then you have a midpoint here, which means we are probably going much, much lower, at least to that 55 EMA around the 198.46 area. Moving over to the Mag 7. Mag 7 continues to look good here right at that 315 resistance. We did throw another wick to another relative high. We still couldn't close above it though. 315.04, closed at 315.03. So we're right at it. Selling a little bit after hours. The momentum's fading a little bit. Want to see a little bit more aggressive push through that level. Otherwise, still watching this closely. If it rejects from here, that's going to be concerning. But right now, price says this should keep going in my opinion. Moving over to Apple and Microsoft, you can see Apple was down about a quarter, still stuck in the same range, threw a wick to those levels and then rejected as you would suspect. And then looking over at Microsoft, continues to go just a smidgen higher, still hasn't touched that level yet. Still expecting a touch of that level before we see a change in direction. Momentum continues to fade, the RSI continues to fade here, but price continues to melt up slowly. Moving over to Tesla and NVIDIA, Tesla was down 3.5%, continues to sell from this kind of topping pattern. Does not look super great here. We've been talking about it. Looked like a left shoulder head. Maybe we get a little bit of a right shoulder. Maybe it's already happened. Either way, does not look super great. And then you got NVIDIA continuing to hold support at 140.76. Still looking for this to go to that next level, 149.65. The momentum is bullish. The RSI definitely a little mixed. Definitely in a topping area, but price continues to melt up as well. Moving over to Meta and Broadcom, these continue to be the absolute rocket ships of markets within that Mag 7 or kind of the Mag 8 or however you want to think about it. Meta continues to be very strong, up over 3%. And then you got Broadcom also rocket ship over the last 2 weeks, up another 1.65%. This is another all-time high here for Broadcom. We said this could probably accelerate into the 280s. I still think that is probably going to happen. Moving over to staples and discretionaries, pretty much nothing going on here today. Staples pulled back a little bit, but still holding a higher low structure. Momentum fading, RSI fading, but still looks like this is set to go a little bit higher here. Does it pull back to 81.85 before it does it? Maybe. And then looking at discretionary, still in the middle of this range. No clear movement there. Momentum still bearish. RSI still bearish. Moving over to 20 and 50-day breadth here. You can see 20-day pulling back slightly, but still in the same range. Momentum bearish. RSI still bearish. Is this just a retracement to the SMA and then we get a little bit of a continuation lower? Maybe. It's still above the 50 line there. And then looking at 50-day breadth, still well inside of this kind of triangle pattern, still above that 68, 66 level. So no changes on the structures here for either of these. Moving over to yields. Yields saw a big move on that jobs number today. So this is selling off pretty aggressively. Is this starting to signal some potential cuts? I do think that is the case. The question here really is, does this start to sell so aggressively that it starts to create a little bit of panic in markets? That is the concern. I don't think that's the case quite yet, but it is accelerating to the downside pretty aggressively. Pretty good move on both of these. Over 2% on these yields. Moving over to bonds. Bonds had a great day, up a quarter on J&K. TLT having a great day, 1.62%. I've been saying buy it in here. This is probably set to go higher quite a bit now, above that 85.90 level, above the short-term EMAs. Buy some in here if you can. Momentum very powerfully bullish. RSI well above the SMA. Probably going to try to buy a little bit more in here tomorrow. Don't have a ton of powder dry left for bonds right now, but I do like this, and I think this is a great opportunity, especially with the jobs data. I think people are going to be rushing into bonds here pretty soon. And then finishing up here with the VIX, you can see this continues to sell pretty aggressively, right back down to these lows, still expecting this to go down to the trend before we see a major reversal. I do still expect that to happen, but for now, still expecting this to go to the trend, which is now sitting around this kind of 1616 area. Moving over to my accounts, I managed to make a little bit of money on the day. Still bullish on the Q, still holding that same position, not too worried about it. Really deep in the money. 512 is the level. A little bit of loss on the calls, no issues there. If this comes in a little bit, not too worried about it. Plenty of room for protection. And then the Russell here, I did roll out and down. I took off that position, managed to make a little bit of money on it before it went lower, and then I sold at 207, which is in a small profit now. Still watching that key level. If it dips below there too far, probably not going to go too much lower than that level. But for now, bullish across the board, made a little money today. Everything looks good. Let me know down in the comment section what you think of Jerome Powell and when he might be cutting rates. Is Trump right on this one, or should we continue to stay paused despite some of the weakening job numbers that we got today as we head into the jobs report this weekend? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.